It's a great program. Good to see,
yeah,
isn't
excellent.
it? Really
excellent.
good. Now, Bill, while we all wait for the next move on interest rates, banks are trying to entice nervous borrowers back into the market.
They are, Georgie, and it's a good idea. It's good for consumers. They're doing it by dropping fixed interest rates. In fact, 90% of the banks have dropped those rates, and that could mean saving thousands.
With the global economy in turmoil, a housing market in a slump, signs of uncertain times are everywhere. Even our banks are feeling the pressure.
By historical standards, what we're seeing is just completely unprecedented.
90% of mortgage lenders have slashed their fixed-rate home loans since August. Some are now below 6%, while the variable rate is at about 7.3%.
I think the odds are stacked in the favour of someone fixing. Fixed rate loans, or the interest rates, are sitting well below the decade average variable rate.
Queensland apparently is part of the reason, with 40,000 fewer first home buyers than 2 years ago.
That translates to about $5 billion that's not being borrowed, and that's really burning a hole in banks' pockets.
The best deals we can find are 1 year with Greater Building Society at 5.94%, 3 years with Citibank at 6.25%, and 5 years with Heritage at 6.39%. The four big banks are more expensive, offering between 6.4% and 6.6% for 3 years.
The market is effectively pricing in about 3 rate cuts over the coming year, and that's really being signified in the fixed rate market.
The danger, of course, with fixing your home loan is that variable rates could also fall, leaving you worse off over the longer term. And if you want to get out of your fixed rate, break fees are expensive. Leonie Mellor, 10 News.
And there may be some more good news, with the Reserve Bank hinting that a rate cut could be on the cards next month. In its minutes released today, the Reserve Board says it could consider a cut, so Melbourne Cup Day could be a real winner in more ways than one.